Good morning, traders, and this is your Dow Jones day trade setup for today. So yesterday was the close of the quarter, and just start on the monthly just to give you a picture of what we have here. So firstly, we've got a monthly close below the previous monthly fractal, which is this one here. That, unfortunately, is a fairly bearish signal. Okay, so I do think stimulus, this tail here is based on stimulus that's coming to the market. But the fact that we've closed below that level is fairly interesting, to say the least. But I think don't take too much into this, because if you look at the S&P chart, the S&P actually closed above its monthly level. So S&P charts are a little bit different to the Dow. And I think if you really want a reflection of the US market, the S&P is probably the better one to look at. I think the weekly, so we've still got this bullish weekly bar here, and this week's not finished yet. We are battling to get through this level. You can see how we're rejecting the level still. So we'll need to see a weekly close, and you can see it's a weekly swing low as well. There it is there. So we need to get a weekly close above that in order for us to really get some traction and sort of move to the next level. For me, the next level would be the weekly 200 EMA. Looking at the daily, still this flag slash reversal, consolidation, whatever you want to call it. It's pretty much something like that. So it is a bit of a flag, but what concerns me is that we've got this red bar inside green and red bar inside green. So it's an inside bar there, inside bar there. That's a double inside bar, potentially a double top. So in saying that, a break below that area there is going to give us a double top. Okay, and that double top will be 1,474 points, which would take us really far down, and I wouldn't be too surprised to see if it is a Fibonacci level. Let's just measure this out now. A 1,200 points would take us to 61.8. I think the 61.8 ties up with this inside bar here. So let's just put a level there. That probably, I'd feel a lot more comfortable with that, quite frankly, because that means that we've had a retest of the low and we've formed a proper base. At the moment, this is a V reversal, and I don't trust V reversals at all. Anyway, enough on the long term. I think the short term picture is quite simple. We are in a consolidation phase. Okay, and let's just delete the noise. I'm going to use these long-term levels here. Okay, that's our consolidation range at the moment. I wouldn't be too surprised to see us tag the bottom here, or even extend the bottom of the range to this area here. The reason I say that is you look at all this congestion here. So this would form a base, 21,069. So a pullback into that area would be interesting, would give you the opportunity to look for a long again. The fact that we've broken through the moving averages on the 3-hour here and we're getting a crossover, you'd want to see a pullback onto those moving averages and then a move down. But ultimately, I think we're looking for a break below 21,175 to validate this double top. If you get that, then you have a pretty good trade on the cards, or something like that, and takes us right down to this level here, and that is your 1,200 odd point trade to the downside. Okay, so however, my advice to you at the moment is don't even try and trade the 200 EMA. 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 I mean, you could be trading an hour if you really want to, but you're not really going to get going. If you look at what happened yesterday, only really got going into the close. Up until that point, it was all over the place. Day before you had traction. Day before you had a bit of a trend to the downside. Day before you had a pretty strong trend up. So big up, big down, big up, big down, big confusion. That's basically what we have at the moment. So in saying that, what I would suggest is get onto a much lower time frame, like a 5 minute, and you can see after the European Open, you can see it trended down. Fairly easy trading. There was your one entry, rejection of the moving averages and a crossover. So your entry was pretty much below that level, and your stop right above there. Okay, so your risk to reward here is, what's that, 57 points, and all you would be looking for is sort of 120 odd points, and your first exit would have been here on the 200 EMA. Or alternatively, you could just move your stop down to above every bar that actually rejects the moving averages, and put another entry in at the break of that one. Another break there, stop up there, a break there, stop up there. Okay, so my advice to you really is just pick the lower time frames and trade. You see, you would have had a good run here, just trading from there. Let's say 60 point stop loss. Even if you'd got out of the 200, or just move your stop down to there, and then moved it down to that fractal when it formed, you're already sitting at a 4-to-1 and 6-to-1, 7-to-1 trade. I mean, that's substantial at the moment. Okay, so that's pretty much what my advice to you today is. And you can see this was the US Open here, and it's always volatile at the open, so you try not trade the moving average strategy right at the open. Give it some time to settle, and you can see there's the settle. Double top forms, break of the double top here. Could have given you an entry, but I think the better entry would have been right in this area here. As your moving averages came closer together, and what you've been looking for is a break above that fractal or below that fractal there. Okay, so that would have been a little bit bigger, 150 point stop loss, but that's what you've been looking for. And as soon as you got these rejection bars here, as you can see this break here, so if you've taken a break of this rejection bar here, your stop would have had to be above the previous fractal, otherwise you do run the risk of getting stopped. Okay, so anyway guys, that's pretty much the strategy at the moment. And if you look at what's transpiring now, what you'd be looking for, where are my levels? Let's bring them down. Just from a real live scenario, if we get a kind of rejection off there, it would have been an entry, but you can see how the moving averages are turning up at the moment, so it's nothing to write home about. So what you're going to find is you're going to get a retest of a breakout, which will be right here. It'll bounce back, come and test moving averages. Look at the oscillators at the moment, they're all over the place, indicating we're getting a level coming close, and it should give you a little bit of sort of backwards and forth over the moving averages. You're looking for a crossover, and you're looking for trend line breaks. So there's a trend line that you're looking to break as well. Okay, so lower time frames, just check the price action, and obviously what are we looking for? We're looking for a break above here, preferably a break above this breakout level of 21,517, and a pullback, retest, some sort of structure forming on the moving averages. Don't trust the first move. Okay, so the first move will happen, then you should see a second move, and so long as that second move is a higher low, you can see what I mean by that. Let's go here. There's your first move there, pull back, and then another move starts. So don't trust the first move. Sometimes a pullback is pretty strong as well. There's first move up, pull back, small first pullback, and then we rally quite hard before we're getting out again. Okay, hope it makes sense. This is not a short entry, just to be clear. A short entry, I'd want to see the moving averages close together like this and moving down, but this accelerated away. We've got deviation on the moving averages, so could be a rejection still happening, but I would expect to see a bit of a consolidation somewhere in this area, either a bit of a pullback or a break and then a pullback. But looking at moving averages turning like that, I think you have a potential for a move to the upside. And then just take your profits early. Don't try and hold this thing forever, because I do suspect we are in a fairly big range at the moment. Okay, anyway guys, that's where I'll be trading today. Hope it helps, and we'll catch you later. Cheers for now.